So Scott's back. I know that we got a tremendous response to the earlier conversation with between Scott and Dom, and at least I was there a little, but the conversation and the information, the input, the thought leadership that they both provided in that session was outstanding in a technology area or a deliverable that has been succeeding slowly and seems to now be succeeding really rapidly in Bitcoin. So we didn't get to read out Scott's full bio earlier, at least the bio that he's given me here, and he's going to be welcome to expand on it, but I'll just read through it quickly. Scott has been working in various aspects of the benefits industry since 2008. He spent 8 years working for a major group insurer before becoming an advisor in 2016. In 2020, while watching an unprecedented amount of public spending, he started studying inflation and discovered Bitcoin. On a mission to bring this innovation to employers, he founded Block Rewards in 2023. Block Rewards' mission is helping employers integrate Bitcoin into their total compensation strategies. He is the author of Bitcoin for Financial Advisors 2023 and the Tao of Bitcoin 2024, and is the host of the Block Reward podcast. I highly recommend finding that podcast. I haven't read the books, which I probably will pick up. But with that, it's over to you, Scott. Thanks a million.
Hello again to everyone. I'm thrilled to have a chance to come back and talk a little bit more detail about the subject. Just to sort of bookend on what we were talking about this morning. I feel very strongly that Bitcoin has a high probability of being the most important financial innovation, certainly of this decade, but possibly that we've all been alive around to see. And so the presentation this afternoon is going to dive into what we are doing with what is Canada's first Bitcoin group product. And before I do that, I'm going to spend a little bit more time, I would say, making the case for how Bitcoin, the relevance for employers, and why I am so bullish on the idea that Bitcoin is going to play a role in the employment relationship. So obviously my background in the industry, I've been in benefits for as long as I've been working. And when I understood Bitcoin, originally I thought immediately this has some role to play as insurance for savings plans and pensions as a non-correlated asset. And as I understood it better, I realized that my philosophy or my thesis is that we're just going to head into a period of time where compensation and rewards are going to evolve, and it's not going to be the case anymore where we can simply think about accepting one single form of money or paying one single form of money. And I'm going to share a presentation here. So let's spend a few minutes just on a little bit more of a deeper dive to build the context of Bitcoin in the sense of why employers should think about this as a tool that potentially could impact their ability to recruit and retain staff. So what is Bitcoin? We were talking about it this morning in the context of it being a synthetic commodity with a finite supply. So that's true. There are many things that are true statements about Bitcoin, which can be frustrating for people who don't understand it as outsiders. It's a technology-enabled money system with a permanently fixed supply, which we covered a little bit earlier. It's the world's only money system with a transparent and immutable monetary policy. And what do we mean by that? Bitcoin functions on a fixed set of rules that are, fairly easy to understand and are publicly available to anyone who's interested to learn about them. So Bitcoin has a monetary policy that dictates the schedule of issuance of Bitcoin between now and 2140. So that is something you could basically set your watch to, which is not true of the Bank of Canada or the US Federal Reserve or any other central bank, which is more of a monetary policy on an as-needed basis or sort of an ad hoc system where we intervene and tinker to adjust the economy as we see fit. So Bitcoin offers an alternative money system basically by offering a money that has rules that don't change. And the third important innovation about Bitcoin that is relevant for employers especially is that it's internet native money, and so it's borderless. And particularly for I think in two specific use cases here. One, international employers that are seeking to send money abroad. Bitcoin is vastly superior than anything that can be done today through the SWIFT system, including wire transfers. And employers that are importing foreign workers who are sending money back home. So Bitcoin is also better for temporary visa workers that are looking to take some of their paycheck and send it back. Wire transfers, Western Union, these services are very expensive and very slow, whereas a Bitcoin transaction finalizes around in 10 minutes anywhere in the world, 24/7. And depending on the transaction fees, which fluctuate, could be just a couple of dollars. So Bitcoin is also well thought of as the last piece of the internet protocol stack. And so the internet is actually a series of different protocols that evolved starting in 1969, and subsequent innovations enabled subsequent levels of functionality. So if you remember the early days of the internet, we were really talking about static web pages and downloading a photograph one line at a time. And nobody even then was thinking about the ability to stream 4K video on a handheld device. These are things that were built on top of basic protocol technology. And Bitcoin itself is a protocol. It is a protocol for transferring value online. And the most important innovation in this involved in this technology was solving the problem of how to have a money system where no central issuer was the guarantor and it was fraud proof. So Bitcoin's finite supply is partly an innovation that was born out of the need to solve this problem of preventing fraud in online transactions. And another interesting thing about Bitcoin is that it's a bearer asset, which is something that is a little bit different from what we are used to. Typically, things that we own as investments are held by custodians. And so if we think about owning shares in a company, that would be held inside your Scotiabank, your investment account. And if Scotiabank was, your ability to redeem that investment is tied to the custodian's ability to allow you to do it. And Bitcoin is uncensorable. It works differently in that people who own it, for the most part, are in possession of it at all times, which is can be a little bit of a source of stress since it's money, but it also represents an innovation in terms of thinking about the ownership of property and how that actually works. And the third piece is that it's engineered money, and this is something that we're going to have to get used to unless Bitcoin goes away. In solving that problem with internet money, what was really unleashed on the world was, for the first time, the opportunity for a free market in money to actually exist. And before that, before the existence of Bitcoin, citizens of countries were really hostage to the central bank's monetary policy in their own country. And there have been examples all over the world where countries have dollarized, and Argentina is a great example where the US dollar starts to be accepted by the marketplace and be used alongside a local currency. And it's at times at the discretion of the merchant as to which currency or both is going to be accepted. It doesn't really work that way in Canada. Our money has historically performed better than a lot of those other monies have, which has been great for us. But regardless of the performance of the money, our money still is really not engineered to outcompete other forms of money. It's sort of the default opinion that the money we use is always going to be Canadian dollars, and that could very well be true. But what I think is, and this is what I was saying this morning, where it doesn't necessarily even ever have to be the case that people are going to Starbucks and paying for their coffee with Bitcoin. The mere fact that there is a potential alternative or a point of reference for us to compare one money's performance with another creates competition in the marketplace, and it enables people to start to make a decision as to whether they want to use one money or another as a savings vehicle or a place to store their monetary energy when it's not being used. So Bitcoin combines these three things, which each of them represents a core step function improvement to the way we're used to money working. If you think about internet native money, we're not able to use Canadian dollars if you went to travel in Scandinavia. Money is something as a technology that works only locally in the world of central banking. So it does make sense, or there is definitely an undeniable appeal to have a money that could work anywhere in the world in the same way. And the notion of commodity money. So Bitcoin is absolutely a commodity money. If you're thinking about Bitcoin as a form of money, the underlying commodity are the rules that can't change, and the fact that Bitcoin itself is a finite commodity. So Bitcoin has something underneath it. So anytime, a common refrain is this idea that Bitcoin has no intrinsic value. Firstly, there is no such thing as intrinsic value. All value is subjective, but the subjective value of a Bitcoin is not purely based on sort of this concept that someone might, the greater fool theory, that someone might buy it for a higher price than you did. There is a finite, an intangible, finite commodity that underpins the Bitcoin monetary network. And lastly, this is the most important part that I think is relevant for us in Canada. It's inflation proof. So what is inflation? Inflation is the expansion of the monetary supply, the available unit of currency, which diminishes the purchasing power of the unit. So we often, the terms, CPI is used as a term that is meant to explain inflation, as though inflation is, what inflation is, are rising prices. But inflation is actually the observation of the loss of purchasing power of the monetary unit, which is the direct result of the expansion of the monetary unit. So this is a problem around the world that has been a bigger problem in other parts of the world, but it is a pretty big problem in Canada. And inflation is a number that gets, again, captured as CPI, as going up and down. But if we're talking about the expansion of the money supply, that number is much more observable, and I believe that it's much more meaningful. So I want to make the argument that we are headed into a time structurally where money is going to work functionally differently than we are used to, and how we are used to money working over the last 20 or 50 years, that time is over. We are not going to return to a time where Tiff Macklem was saying, as part of the rate cut, that we're on track to get back to 2% inflation. That's just patently false. And I'm going to spend a few slides talking about the mathematics of why. But more importantly, there are examples from all over the world that I think are key triggers for us to really stop and take notice of legacy financial planning ideas that perhaps need to be reevaluated. So firstly, there are several countries over the world over the last 8 years that have experienced a serious currency event. And Turkey and Venezuela, to name a few, these are countries that, from an economic standpoint, from a production standpoint, wouldn't look that different than what Canada would have. And really what got away from them was the rate of money creation. And we're seeing a massive repricing of commercial real estate happening in Canada right now, but particularly in the United States, which is going to really affect the balance sheets of a number of different important financial institutions in the US. I think that the evolution of work from home, as one particular example, will force us to rethink the value of what have been sort of AAA rated properties, and the death of the 60/40 portfolio. So I certainly think that one of the great arguments we didn't make this morning for Bitcoin being insurance and pensions, and this is where I gained my entry point into Bitcoin, is that the 60/40 portfolio had its worst year since 1937 in 2022, and I have a hard time seeing how the bond market is going to get to a place where we can see a safe and predictable um, portfolio allocation based on that split. That's kind of been the bedrock of portfolio theory for a long time. So here's what I'm talking about with the relevance of the expansion of the money supply. They can talk about the target of 2 or 3% inflation all they want, but the money supply in Canada has been expanding on average between 7 and 8% since 1968. So that's a pretty staggering number. If you think about the total amount of money available in the economy, that means that number is doubling every 8 or 9 years. So it's no wonder that our real estate prices have gone crazy over the last 8 years. During that time, we've actually just about doubled the amount of dollars in circulation. So money will find a home when when they're continually making more of it and the purchasing power is going down. People will reflexively find somewhere to store it to keep their monetary energy safe. And this is why we see asset prices inflating. And this is this is kind of the misnomer in the equation. Everyone looks at CPI, and very few people are really looking at the accelerating rate of the expansion of the money supply. And the bottom chart is what's happening in the US. So it's happening in the United States as well, which has hit 8% over the last 4 years. Now, this is a problem. On the right-hand side, we're looking at the exponentially compounding cost of the United States government debt servicing. So this is the compounding is a wonder of the world when it comes to investing. It's also a wonder of the world when it comes to bankrupting, because the amounts grow in the same way. And we have seen such a slow and steady accumulation of debt that I think the prevailing attitude among the public is that we can accumulate debt forever and it will be fine. But it took 200 years for the United States to accumulate $1 trillion of debt, and they added $1 trillion of debt to their balance sheet last August in a single month for the first time ever. So these things are non-linear, and we have entered into a new era where merely the cost of servicing debt is going to be something that needs to be acknowledged. And the chart on the left shows there's a lot of numbers there, but essentially every country that has been anywhere near the level of debt servicing costs that we have, other than Japan, which is sort of its own anomaly, has experienced a significant currency event. Canada is in the third worst position in recorded history, excluding modern day Japan. So we are already seeing the cracks. On the left-hand side, we have the diverging standard of living that's happening between the US and Canada. I don't think this is a surprise to anybody, but the numbers are not very exciting. And part of the problem on the right-hand side, and I think I said this at the start, but I'll say it again just in case I forgot. This is totally apolitical. No change of government is going to be able to fix this problem, because there is no political will to cut spending in a meaningful way or really address the debt that we have already accumulated, particularly over the last 8 years. So our reported budgets have an ongoing history of coming in significantly higher than estimated, and this is a problem. Basically, we in Canada are spending as though we are the world's reserve currency, and we're not. And this is why we're seeing that divergence that's happening on the left-hand side of the chart. So you can cut this however many ways you want. Housing in Canada, I think, is a great thing for, this is on the minds of employers because of the chart on the right. What we're seeing is a real uncoupling in Canada of what people are earning and what life is costing. And this is a real problem if you think about recruiting and retaining staff. This is going to be what I believe is sort of a mission critical problem that really, there aren't a lot of obvious paths to how we can regain a level of affordability of general day-to-day life in Canada that resembles what any of us are used to. So the concept of using Bitcoin as a savings tool eludes most people who haven't studied it, as David said earlier, for at least 100 hours. This is a great way to visualize, I think, why in many ways, once you've understood the concept of Bitcoin, why people get so interested in it and why the market is valuing Bitcoin the way it has, because it is the only form of money that is available to us that is impossible to inflate. And so when you think about the amount of money that you have in Canadian dollars, as a percentage, you're growing it, but what you're really trying to do is grow it at a rate that's faster than the rate the total amount of money is being expanded. And so Bitcoin offers a much simpler alternative where it's something that you can own, where the amount you own as a percentage of the total amount that will ever be available can never change. And so other people can make that same investment decision. They can own some, and anyone who owns any amount of Bitcoin can immediately know forever how much they have in relation to how much is available totally. And why this is relevant is because if you look at the historical performance of the TSX 60 since 1968, when we showed that money expansion chart, or real estate, even in the hottest markets in Canada, the compound annual growth rate of both of those sort of measurements is about the same as what the money supply is expanding at. So it's almost a myth for most people. We're not really making any real gains or real money. If you're owning a home or you're owning the index, what you can actually hope to be doing is keeping pace with the rate of expansion of the money supply. And I often say where I think we should be thinking about in the future of financial planning is that real rate of return should really be measuring investment gains against monetary debasement instead of investment gains against CPI, because CPI is an arbitrary basket of goods which can be adjusted depending on whatever measurement they're hoping to sort of capture. So if the price of beef gets too expensive, they'll just substitute that out with liver and assume that people will naturally start eating liver instead of beef. And that's not how it works in real life, but that is how CPI is adjusted continuously to allow the numbers to land closer to the optics of where it's hoped to be. So I mentioned this morning, and I can't say this enough. I think most people get caught up in the negative news stories around Bitcoin and the volatility. Volatility aside, no matter how you slice it, and under any data set that's longer than 48 months, Bitcoin is far and away the best performing asset you could own. And so owning even a small amount of it, should it continue to perform in this way, is really a no-brainer. And why I think it's interesting for employers is for people who are involved in helping employers think about total rewards, think about standing out as a company that's forward thinking and doing things different, and at the same time providing something for their staff that is of real value. This thing is something that ticks all the boxes. And so there's an opportunity for companies to start thinking about this as something they might be able to use as a tool. And the last slide I want to talk about Bitcoin performance is that Bitcoin itself can be a unit of account. And these are just two charts to sort of capture exactly how that outperformance is, what it means for grounding it in reality. So if you were to price Canadian real estate in Bitcoin instead of Canadian dollars, the price of a house in Canada average in 2014 was $404,000, which was 696 Bitcoin. 10 years later, 2024, average price of a home is $720,000. And that same price in Bitcoin is 9 Bitcoin. So the price of real estate in Canada priced in Bitcoin has gone down by 99% over the last 10 years. On the right is Berkshire Hathaway, which has done the same. So this is the price of a Berkshire Hathaway stock priced in Bitcoin. Since Bitcoin's inception, it has lost 99% of its value. So there is an opportunity cost. There is a real world cost to not having exposure to this asset. And in fact, to holding cash or substitute assets instead. This isn't a crazy idea, you know? So I think that the market is trying to determine how long will Bitcoin have to outperform before this becomes true? 15 years is starting to be a pretty long track record. I think each asset manager, each business owner will have to make this decision at year 17, year 19, year 21. At some point, the market will, if this continues, the market is going to compel a choice for them. So I see Bitcoin carving out a piece of several aspects of total rewards. And I'm going to talk really in detail today just about savings plans in the interest of time. But we are at Block Rewards, we are working on solutions for all three of these things. And we want to create a number of different paths for employers to use this tool to offset the ongoing permanent debasement of the Canadian dollar. And so to just sort of reframe all of that information into the conversation and context of the employer-employee relationship, the compensation problem on the employee standpoint is that employees are experiencing a declining standard of living so that they constantly need to earn more. And perhaps even the notion that being paid every 2 weeks might be an idea that's time has passed. This is something that came out of the sort of assembly line revolution of Henry Ford, and getting people to sort of front the business their time and energy for 2 weeks, and then to be paid in arrears for that work. And today there is a massive exploding market for payday advance loans, and there are a lot of large employers in North America that are actually incorporating payday advances into their compensation structure, 60% advances, because people are getting to a place with being stretched that they can't afford to wait 2 weeks for their paychecks. So these are problems that Bitcoin can address. Savings, when money becomes broken and stops working effectively, it becomes impossible to effectively plan for the future. And this is something that is, directly linked to stress, anxiety, depression, productivity, absenteeism, presenteeism. These are all things that matter in terms of employers' ability to run a good business, but also to just retain mentally healthy staff. And then the last piece is that I think that there's an abstract connection now today between work and rewards, and it's because we've entered into this world where everything is kind of TikTok and Duolingo, where things are gamified and there's a dopamine reaction. We have an attention span shortened generation that's coming in after us, and the notion of being motivated to do work based on being paid for something weeks later or even a quarter later is potentially doesn't resonate in the same way that it would have for people in Gen X or our parents and people who came before us. So these are problems for the employee. For the employer, the continual pressure to raise wages is a problem that is not going to go away. And no business is going to be able to raise their prices fast enough to raise their wages at 8 to 10% per year. That's not possible. And that means that compensation is a growing flight risk. And I think it's very true to say for anybody who's involved in working with group retirement savings plans, it was always a space that was complex for the average plan member, but the investment landscape is becoming seemingly increasingly complicated and risky. And I think the general faith in these kinds of products is also not what it used to be. There's not the same appeal today, particularly for younger staff, in some of these extended time horizon savings products. There is a more of an interest in what's trendy and what's hot. And that certainly is, Bitcoin falls into that category. And lastly, incentives. If employers can't effectively drive behavior using compensation, that's a problem. So Bitcoin has different ways to address all of these problems. Obviously, the savings one is where I want to spend the most time. It's an idea of putting some of your money in what could be viewed as the simplest savings tool there is. It's not an investment, it's not a company, it's just a finite commodity that happens to be physically intangible, that is also the best performing asset of all time. And this is something that makes sense as a perk. It makes sense for people to consider putting some of their salary that they were going to invest or don't need to spend immediately. These are obviously nuanced conversations, so this is an overview of the concept. For compensation, I mentioned earlier, particularly for international employers or international staff, borderless money, it makes a lot of sense. And the fact that it has over longer time frames, not only does it not lose value like our Canadian dollars, but it actually appreciates, and it appreciates at a rate faster than traditional investments. So our sort of flagship product that's available today to the marketplace is called Bitcoin Purchase Plan. This is a Bitcoin savings plan that works the same way an RRSP would through a group product, with the key difference being that there isn't the same tax advantage, income tax refund that would come on the part of the plan member. But every other part of how it works and looks and feels has been designed with group plan administrators in mind, so that they would have an experience that mimics what they would be familiar with on other savings plan products. So we get individual plan members to register with us, and we run with an education rollout that would be similar to what a company would expect if they were putting a regular traditional savings plan in place. We generate invoices that are maintained by plan administrators, but in the same way you would confirm a transaction before every group RSP deduction happens, we do the same thing with the BPP. It's a centralized payroll deduction and an after-tax line item on a person's pay stub, so there are no tax events that happen for the employee. And then on payday, everybody receives their Bitcoin directly into their own wallet. So the perks of this product are, it's flexible. It can be built however a company might want to do it. So it could be matching, it could be voluntary, it could be a fixed dollar amount, it could be based on a percentage of salary. We don't have any eligibility requirements. And so I can give a good example of a current client we have today that's a large electrical firm based in Edmonton. And they run a group RSP and our Bitcoin purchase plan side by side, because the business owner is a Bitcoin fan. And their program is a $1,200 a year, dollar for dollar matching program, and the employees are given the choice to do one or the other. We have so far, in the last 10 months, converted 80% of their staff from the group RSP over to the Bitcoin plan, and more than half of them have increased their voluntary contribution. And in the time since we started with them, the Bitcoin price has tripled. So for those people who got their $1,200 match from their employer on a dollar for dollar, that was $2,400, and today that amount is almost $8,000. So this company loves us. The water cooler talk around the program is very positive, and they're avidly using it as a recruiting tool as they go out in the market and try to hire people from their competitors. This is a little bit of a busy slide, but I just wanted to give you a little bit of a feel for what the product looks like today. So we have a dashboard that is very similar to what a plan administrator would expect. And so inside this dashboard, they are able to manage their members and invoices and adjust any information that would be pertinent to their company, including the Bitcoin addresses and a billing frequency. As an example, we have some interactive metrics around performance, and this is something we're continuing to evolve. And so our next rollout that's coming in Q3 is a plan member experience that will also mimic the kind of plan member experience a group product on the traditional RSP side would deliver. And on the right-hand side, there is just a sample copy of what our standard invoice looks like. So we're showing the plan number, the contributions and matches, and the total amount for the bill. I mentioned we've got other products, and this is just to talk about where this is going because I think it's cool. Bitcoin has the functionality to consider paying people even multiple times in a single day. And so we are building an incentive tool that will plug into CRMs and enable the rewards to be paid for specific activities that are structured based around the employer's desire. So if you wanted to run a sales campaign over 12 weeks that incentivized, $5 per successful phone call or meeting or what have you, we're going to be able to do that and do it in a way so that every time the activity in the CRM is logged, it will result in an immediate financial reward for the employee that did it. So we think this is a cool way to really change how employers have different tools to deliver a financial reward that is actually connected to an activity, which is maybe the future of incentives. And yeah, David mentioned some of my materials at the outset. I'm very passionate about the legacy financial system. I'm passionate about advisors. I still am an advisor myself, and I don't think advisors are going anywhere. I wrote Bitcoin for Financial Advisors a year ago, and it's meant to be a way for financial advisors to read a book in 2 hours and make sense of everything that they would need to know, to have an informed conversation with just about anybody. That's available on Amazon. It's not very expensive. It's more just for to get it out there. And then I also run a beginner podcast where I have all kinds of industry experts coming on. New episodes get released every Tuesday. We've had fund managers. We've had bond portfolio traders. We've had this week's guest is a cannabis grower. So it's a full spectrum of people who are interested in the space, and I would encourage you to check it out. It's meant to be accessible for people of all levels of interest. Excuse me. So that's the end of the presentation. I'm happy to take any questions, or if you are interested to reach out, please feel free. You can contact me at through the general mailbox. I'm very active on LinkedIn, and would love to hear from anybody who's curious.
First of all, outstanding, and the platform is terrific. I hope that the advisors get something from this. I was having off while you were chatting. We've introduced a new GRS specialist in our team. His name is John Sai. He's based in Vancouver. Actually, he's in North Van. He's in your neck of the woods, at least closer to you than he is to me. I think we're going to want to have a conversation about the platform and how that looks. Are you incentivizing advisors with comp on your platform?
We have the basis for an incentive model, yes, and it's referrals, not commission. This isn't an insurance product, and there's going to be no service work involved. So I think this is if advisors are interested, we want to make this work. I believe fully that this is, advisors. Fiduciary responsibility is to give good advice. And the product has been designed because I think this is something employers need to start to understand. And I would love more than anything for advisors to be involved in helping us take this to Canadian companies. So yes, we are working on various incentive models to help advisors. You'd be interested to even use it as a door opener. In my own experience selling retirement plans, there are lots of things that you table with clients and prospects that don't get picked up in the first conversation. And it's often the things that you don't sell that get you a meeting or get you an AOR, that get you an opportunity. One of the challenges in the group business is that everybody has the same bag of hammers for the most part. And there are all kinds of block deals and stuff. And that's true. But for the most part, people are selling the same benefits, or they're selling the same, mutual funds. And so I think that what's cool about the Bitcoin purchase plan is that it is something of value, it is topical, and it is very different. So I think it represents a very interesting tool for the group advisor that was interested to get competent enough to try and talk about it as a way to get a business's attention.
And to Megan Vallis's point from a couple of sessions ago, if you know the demographic you're serving, this demographic is coming to you. And so I think what Scott's also saying is first movers will have an advantage in the market that others just won't have. It's the same old vanilla everyone's selling. So if you come up with something completely different, it's got to give you an advantage in the marketplace. I will say that if I remember correctly, and I might be paraphrasing him, Scott, but there was a fellow that you had on, I don't want to mention his name, but the people can find him when they go to your podcast, who's a realtor, I think a very successful realtor here in Toronto. And if I remember correctly, this is the part I just don't want to say because I don't want to say his name. People are going to go hear him say it or something like this himself. But that he's actually suggesting to some customers who would otherwise be buying real estate from him as a real estate agent, he's counseling them to go buy Bitcoin, where Bitcoin he makes nothing from it. He's got no incentive in getting them to buy it other than expanding the network. That's it. And socializing people to literally a civilizational, a technology that is going to have civilizational impact, probably at the scale bigger than what the Renaissance and the technology that was developed in the Renaissance. You know, we're going to have that kind of scale of impact to civilization, and quicker, much quicker, and at much wider scale. Anyway, I'll leave that with you.
We're so used to money working a certain way that I think part of the disconnect is when something that could come along and look so different. It's almost hard to, at a glance, even determine what that thing is. And that's a normal thing that most people who are trying to understand Bitcoin go through, myself included. And it was a long journey for me to get to a place where where I am now. So there's a question that came in the bottom, which I think is worth addressing. Is this TFSA eligible? Not today. However, Bitcoin, actual personally custodied Bitcoin is 401k eligible in the United States, which leads me to believe that we will see that change in the near future in Canada. And if that does, and we're able to convert our product into TFSA eligible, it's going to make our product incredibly desirable, even more than it is now. So I think that not yet, but I would expect the answer to that will be soon.
And in fairness, just really quickly before we shut down, really, Daniel's got a question as well, and I know that Christine wants to get going on her presentation as well. But for the time being, folks, you should be aware that through ETFs, Bitcoin certainly can be acquired in under a TFSA, and it's worthwhile considering that for your customers.
I'll take this if I can, David. This last question
Sure.
about questions. What are the logistics of surrendering Bitcoins for income, and if the price is continuously fluctuating, what is the exchange rate? So the answer to that is the exchange rate is the market rate, which on shorter time frames, it could be, people who have 100% of their net worth in Bitcoin experience a lot of volatility, and that's certainly not for everybody. And to be fair, there aren't a lot of people in the world that are doing that right now. If you're paying yourself first and putting 10% of your paycheck into Bitcoin and you're never touching it, then you're probably, hopefully, in a position where you're selling at a price that's preferential for you. The logistics of surrendering Bitcoin is as a commodity, it's subject to capital gains in Canada. So that would mean, depending on the size, if you're selling less than 250,000 one shot, 50% of it would be subject to tax at your marginal rate.
Richard, you could Google Bitcoin ETFs. There are a number of them that are available both in Canada and in the US. Scott, this has been amazing. Thank you so much, and we'll catch up shortly.